All right, everyone. I'm an insurance agent, Brown Insurance. We do independent agencies. Can you hear me okay?
Sure that the mic is good too. So I'm an insurance agent too.
Are you?
Gotcha. Yeah. There you go.
Are you playing one on TV? Yeah. Okay. Anyway, thanks for inviting me here tonight. Just some quick notes. You kind of like going into real estate for investing, you kind of have to know a different language when you go into investing for real estate on the insurance side. The big key is it's just not a regular homeowner's policy. It's not like you're going to move in there in the next 3 weeks, put new carpet, new paint, and move on in. That's not what's going to happen. The home's going to sit vacant. It's going to sit vacant for 30 days, 60 days, 90 days. And a lot of homeowners' policies have exclusions. And depending on the policy, they're not all the same. Once that vacancy exclusion applies, your coverage is very limited. And it's not as great as it could have been. So if you've got $500,000 house, they may only insure it for $250,000, depending on the policy conditions. So be very aware of that. Be very honest and upfront with your insurance guy, and tell them what you're doing and why you're doing it. Things to look out for: theft of building materials on a typical homeowners is not covered. So we had a gentleman buy a house, had a big shop in the back. He was painting the house, 30 days vacancy. That didn't matter. The theft of building materials was just simply not covered, because who's going to steal your home? They're not going to jack it up and take it away. Well, some tweakers broke into the shop, stripped the shop out of all the wiring, and about $20,000 of wiring. Called in a claim, and the adjuster said no coverage. So not only the materials, but the labor to reinstall it was not covered either. So be upfront. Talk about the theft of building materials with your guy. Vandalism is also not covered. That might be something you ask them how much to add that on to the policy. If it's only $150, you might want to add it on. If it's $400 or $500, you're like, well, somebody breaks in and paints it, I'm going to just go back and repaint it, so I'm not too worried about it. Working with the banks is a big deal too. They're going to want to know if it's vacant or not, if you're living there or not, if you're going to turn around and flip it or not. They need to know all those things, whether it's hard money or not. They're going to want to know what your intent is with that, and make sure that it's insured properly. And again, forced place coverage with a bank is not very fun. So, things to do. When you're talking as an investor and you're talking insurance, it's a whole different language than it is as a real estate agent talking to the bank. So when we talk about value, we want to know how much it costs as an insurance agent to rebuild your home. You can take a $400,000 home and you put it on the beach, and it's worth $800,000. If it burns down, it's still only going to cost $400,000 to rebuild it. So you don't need to insure it for $800,000. Some banks will ask you to insure it for $800,000. You're not required by law to, and it's actually illegal to overinsure a property if you do it on purpose. So know your lingo when you're talking to your agent. Know your beginning cost. Hey, if this house burns down today, it's kind of a junker. It's only worth $200,000. So know that it's what it's worth today. Know what you're going to put into it. I'm going to put in $150,000, and then the rebuild value is going to be $350,000 or $400,000. So if you know those parameters, where you're starting, where you're ending, what you're putting into it, it could save you some money in the long run. Every insurance agent and every company is going to want you to insure it for the end value. So don't try to skimp. Don't try to say, I only want to insure it for $200,000 and that's it. Tell them, I want to start at $200,000, I want it to end at $400,000, and they'll insure it correctly for you. So just be upfront and honest with them. Know the cost of your renovations, very important. Have a realistic timeline for completion. Sometimes you can buy a 3-month policy if you know you're only going to be in it for 3 months or 6 months. Or a year. And you can always buy a year policy, and you can cancel it after 3 months if you want. You get a little check back at the end, so it's kind of nice to do that. And then don't get stuck on the cost. It's going to cost a lot more money. A typical homeowner's policy now is $700 to $1,200 a year. Renovation policy is going to be a couple $1,000s. So just be ready to pay that, but also know If it only takes half a year, it's only $1,000. So I think with that, I had one more slide. Oh, what I can do for you is we can insure Airbnbs for you. Be very careful with those because you can tell your insurance guy, hey, I'm just going to rent it out, and he writes a rental policy on it. And if you read your policy, all 180 pages of it, there's a thing called shared housing exclusion, which means if you use it for an Airbnb, it's excluded. So if somebody comes in there and trashes it, accidentally catches on fire, and they're renting on a short-term rental, the insurance company might just say, sorry for your luck. We could do flippers, so investments where you're gonna go in, take something that's just garbage, clean it all up, make it look nice, and sell it. We do rentals where you can go in and clean them up, turn around and rent them. We do commercial space. We do owner-occupied, of course, your home, your auto. And bare land, we can insure bare land too if you need liability coverage on it. So if Timmy goes out there and falls in a well, you're going to need some liability coverage on it. So we can do all of those things. Anyway, with that, any questions specific to insurance?
Yeah.
Yes.
Is there any reason to buy like a 30-month policy? Like we just always buy a 1 year and then we prorate it. Like what? And that's a safe bet because I know it's not going to take longer than a year, right? Is there a reason to buy a 60-day? Or
Just if you're really tight on cash and you know that's all you're going to need it for. If you know, we just did one. It was actually a rehab loan, and they were going to actually move in. The owner, it's going to be owner occupied. The bank had all the money set aside in a separate account for them to rehab it. They knew it was only going to be 3 months. They couldn't afford the great big year-long policy. And so, and that made the deal go through. If we would have bought the year-long policy, they wouldn't have qualified because of the debt-to-income ratio on the loan. So those are options that you can do.
on bare land, you want liability insurance, but if the only people that should be on there are contractors, does their insurance cover them? Like, do I need bare land to insure other people with their licensed contractors?
Typically you can, and there's a part I forgot of this, but typically you're going to want some of your own risk on there. If Timmy comes in the middle of the night, it's not the contractor's fault. And an attorney is going to put you on the property, sue you on the suit, the lawsuit. So they're going to sue you. They're going to sue the guy next door who watched Timmy go. They're going to sue the contractor. They're going to, and Lassie's going to get named in it too. But the other thing is the named insured is super important on our behalf. If you call me and say, hey, I'm going to buy a flip and my name's Jim, I'm not going to write my first question is, okay, who's really buying the house? Is Jim buying the house, or is Jim's LLC buying the house? And that's super important because if you put Jim on the house, then the LLC is exposed. And so you got to make sure it's insured properly. So, okay. Any other questions? No? Yes?
I had a couple of properties at one time where I was trying to get some quotes, and also every now and then when I've had clients need insurance, I ran into what I'm not sure if is accurate or not, but is it true that if someone were to get a 3-month policy versus a 6 or a 1 year, that it actually costs you more if you do a 3-month policy because you have to renew it again for another 3 months or another X amount of months, rather than if you were to initially go for the first 6 months policy or a year policy? Does that count?
For that time period, yes, I would agree with that statement. So, and it takes time to process paper. So if I'm going to process paper for a 3-month policy, it's the same amount of time as processing paper for a year policy. So there's going to be a built-in front load fee on that, where the insurance company is going to say, hey, no matter what, we're going to charge you $300, no matter what, and then we're going to cover the property after that. So whether it's yeah, in that case, yeah. So you divide that 300 over 3 months or over 12 months, it's going to that's where the difference is. So, okay.
I have another question, but I don't remember what it was without looking at your last slide.
I might have skipped stuff.
I know I was trying.
Come on. Anyway.
Go ahead.
Yeah.
Go for it.
So you were talking about them telling you what you want to be insured for, like 200 to 400,000.
Yeah.
Is it really easy for you to show them come on, it's not that, like, it's, so
Right.
if I call you and say, I wanna be cheap today,
Right.
and then tomorrow I feel risky, you could tell me like,
No,
how
right.
much it's gonna cost.
Yeah, it's super easy to, because nowadays, everything gets downloaded from the county. So we go to insure it with a company, they're gonna say, hey, look, this is a 5,000 square foot house and you're insuring it for $100,000. They're like, no, we're not gonna do that. You're required in your insurance contract to try to insure it to value. And if you don't, if you say, hey, I don't want to insure it half the value, and there's a claim, they're only gonna pay half the claim. They're going to look at this and say, well, you should have insured it for a lot more. So yeah, so insured to value is super important. And it's not that much more. Again, you're building the policy at $500,000, it's $1,000. If you insure it for $1 million, it's not going to be $2,000. It's going to be $1,400, $1,500. So
I think those are some of the education pieces that like our investor clients right now are struggling with, is
Yeah.
that things have gone up so much that they just need those accurate ranges where, I mean,
Yeah.
when we got into flipping, we knew it was $5,000 per system. It was $5,000 for HVAC, $5,000 for a roof, and then very much sooner it was 8, and now those are all 5-digit numbers. But we, prices went up, we went and got 4 quotes, and now we know what we're paying, but it's just, it's having somebody take the time to give them a couple quotes to really understand what things cost right now.
yep. So, cool. Thank you.